Hi students, welcome back to Google Classroom Sri Govilam Public School, Guruvayur. How are you children? Hope you all are fine over there.
In the previous class, we have discussed about two important sources of business finance. They are commercial papers and issue of equity shares. Hope you learned that portions. Today we will discuss another two important sources of business finance. They are issue of preference shares and debentures. At first we will discuss what are preference shares and its main merits and limitations also. Preference shares are those shares which carry preferential rights for payment of dividend and repayment of capital. That means preference shares have two types of preferential rights. The first one is, before any dividend is paid to the equity shares, the dividend at a fixed rate must be paid on the preference shares. However, this dividend is payable only if there are profits. And the second right is, at the time of winding up, the holder of the preference shares will get the return of their capital before anything is paid to the equity shareholders. So these are the two important preferential rights of a preference shareholder. And another important feature is, preference shareholders generally do not enjoy any voting rights. That means they do not have any rights for deciding the vital issues of a company, like appointment of directors, declaration of dividend, etc. However, these shares carry voting right for any resolution of the company which affects the interest of the preference shareholders. And at the same time, it is not compulsory on the part of the company to issue preference shares. Then, let's discuss the main merits of preference shares. Preference shares provide reasonably steady income in the form of fixed rate of return and safety of investment. Actually, this is one of the important preferential rights of a preference shareholder. And the next merit is, preference shares are useful for those investors who want fixed rate of return with comparatively low risk. That means investing in preference shares is advantage for those investors who want security of their investment with higher return. And the next one is, it does not affect the control of equity shareholders over the management. We already discussed that preference shareholders do not have any voting rights. So, they cannot take part in the management of the company. And the next merit from the equity shareholders' point of view is that payment of fixed rate of dividend to preference shares may enable a company to declare higher rates of dividend for the equity shareholders in good times. And the next merit is, preference shareholders have a preferential right of repayment over the equity shareholders in the event of liquidation of a company. That means, at the time of winding up, the holder of preference shares will get the return of their capital before anything is paid to the equity shareholders. And the last merit is, preference capital does not create any sort of charge against the assets of the company. So, the assets of the company remain free to raise funds in the form of loans. So, these are the main merits of preference shares. Then, let's discuss the main limitations of preference shares. The first limitation is, preference shares are not suitable for those investors who are willing to take risk and are interested in higher returns. Because preference shares provide reasonably steady income in the form of fixed rate of return and safety of investment. And the next limitation is, preference capital dilutes the claims of equity shareholders over the assets of the company. And the next limitation from management point of view is that the rate of dividend on preference shares is generally higher than the rate of interest on debentures. And the next one is, as the dividend on these shares is to be paid only when the company earns profit. That means there is no assured return for the investors. And the last limitation from management point of view is that the dividend paid to preference shareholders is not deductible from profits as expense. So, there is no tax saving as in the case of interest on loan. So, these are the main limitations of preference shares. Now, we will move on to the next source of business finance, that is debenture. Debentures are financial instruments for raising long-term borrowed funds. Then, what are debentures? Debenture is a debt instrument carrying specified rate of interest which is issued by an organization to raise borrowed funds. That means the companies can raise long-term funds by issuing debentures that carry assured rate of return for investors in the form of fixed rate of interest. And it is known as debt capital or borrowed capital of the company. Then let's discuss the main features of debentures. The first one is debentures are issued for a specified period and it has a long-term maturity period for raising borrowed funds. Therefore, these provide funds to companies on a long-term basis. And debentures carry fixed rate of interest. This rate is prescribed at the time of issue of debentures. So, the debenture holders are paid a fixed stated amount of interest at specified intervals, say 6 months or 1 year. And the last important feature is holders of debentures do not have any voting rights. So, they do not interfere in the day-to-day management of the business. So, these are the main features of debentures. Then, let's discuss the main advantages of debentures. The first merit is debenture is preferred by investors who want fixed income at lesser risk. That means debentures carry fixed rate of interest. This rate is prescribed at the time of issue of debentures. And the next merit is debentures are fixed charge funds and they do not participate in profits of the company. So, the debenture holders get assured return irrespective of profit. And the next merit is the issue of debentures is suitable in the situation when the sales and earnings are relatively stable. And the next merit is financing through debentures does not dilute the control of equity shareholders on management. That means debenture holders have no right either to vote or take part in the management of the company. So, by issuing debentures, the company raises the additional capital without diluting the control over its management. And the last merit is financing through debentures is less costly as compared to the cost of preference capital or equity capital. So, these are the main merits of debentures. Then, let's discuss the main disadvantages of debentures. The first one is debentures put a permanent burden on the earnings of a company because it has to pay interest on debentures whether the funds collected through debentures are fully utilized or not. Sometimes this interest burden becomes too much for the company. And the next limitation is in case of redeemable debentures, the company has to make provisions for repayment on the specified date, even during the period of financial difficulty. Then, redeemable debentures are those which are redeemed at the time of maturity. And the last limitation is with the issue of debentures, the capacity of a company to further borrow funds reduces because the assets of the company once mortgaged cannot be used for further borrowing. So, issue of debentures reduces the borrowing capacity of the company. These are the main limitations of debentures.
So students, I hope all of you understood the concept clearly. And please note that the notes of the lesson and test paper are also attached along with the class. Make use of these available materials. Study well and attend the test paper without fail. That's all for today. Thank you.